Bill Miller doesn't have a huge like Alibaba allocation. Like he has, I think it's like 3-5% of his portfolio. So even if he's wrong on this bet, it's not gonna kill him, and that's what we gotta realize. But me, if I'm wrong on this bet, it's gonna hurt, man. I'm not gonna lie, man. Hello everyone, welcome to Just Invest Today, and today we have a great video, man. Today we're talking about Bill Miller. He is talking about Alibaba and why he thinks it's a great purchase. We're gonna break it down in this video, man. And if you don't know who Bill Miller is, then you're living under a rock. He beat the S&P 15 years in a row. He bet on Amazon when it was out of favor. He bet on Bitcoin when it's out of favor. So this guy knows what he's doing. He knows how to read the room, especially when stocks are beaten down. Let's hear what he has to say about Alibaba, what he's seeing in the market regarding Alibaba. So before we get into this video, guys, can you please like this video, subscribe to my channel, man. I'm going to be providing you with so much new content. So come on, man, like it and subscribe. Click it, click it, click it. So let's get into it right now.
Alibaba, just speaking of a company that has come under scrutiny in its home market in China, has been, certainly the stock price has been affected by that and regulation from the Chinese authorities, and yet you continue to own it in a fairly sizable position in it.
Look where Alibaba is right now, $122. So he's talking about Alibaba at this price right now. Pre-market, $118. It went down 3%, and this is what's been going on in the market, and this has been the story of Alibaba, basically down 60%, 50%, whatever it is, but it's been down a lot for the year.
Why?
Yeah, we bought a chunk of it when all of the stories broke about Jack Ma. He disappeared for a while. Mm-hmm. There's still stories every day. There's a story today about the common prosperity that President Xi wants, and the new regulations for things like DD and gig workers, and all of that is real. We don't know how.
So that's what I'm saying too. I bought it at the same time Bill Miller did, when all the Jack Ma missing and all the probably potential fines, which it came to be true that they were actually fining Alibaba. And that's when I started buying. That's when I started putting in money into it, and that was one of my mistakes, is that I put way too much money in the beginning, and that's a learning lesson, because it was still dealing with a lot of issues that haven't been resolved yet. So I just put too much money into Alibaba stock right away. I should have just waited a little bit more to just wait out what's gonna happen, knowing that I know the price is gonna go down more because all the regulation, anti-monopoly stuff wasn't solved.
How far that's going to go, but right now the market price, in my opinion, fully reflects that in Alibaba, for example, because it trades now about 15 times the next 12 months earnings, and we think that the company's growth is going to slow, but it would be surprising to us if over the next 3 years they couldn't grow at least 15% a year, generate a lot of cash, still have a dominant market position.
So there you have it, man. He's telling you that it's trading below 15 times next year's 12 months earnings, man. And he's saying that, if it's trading at that low of a price with a dominant market share, are you telling me that Alibaba can't grow at least 15% forward looking out? And that's how you see it as a amazing opportunity, because if Alibaba just grows 15%, and they are saying that it's going to grow 20%, 20 to 23%. So if it's going to grow 20% into the future with a dominant market share, it's severely undervalued at this price and provides a huge upside. But he did say that when we're looking at Alibaba, we don't know how far the regulation is going to go, but the market is pricing that all in, and that's why it's trading so cheap. So that's what he's seeing with Alibaba right now.
Deal with these political uncertainties.
There's a couple aspects to that. The first one is we really try and understand, based on what we know now, about what the economic impact of those measures will have on these companies. So how will it affect their earnings growth? I mean, Alibaba was growing 25% a year to 30% a year for a long time, and now it's going to be growing a lot less than that. Mm-hmm. But again, that's now reflected in the price. And then the other part of it, might have said, or if I didn't, I should have said that since the financial crisis,
Oh, the price right now, all of that future common prosperity regulation is reflected in the price, and that's going to create all the upside. And we got to remember though, Alibaba still has amazing businesses in the pipeline. I talked about this. They have a Southeast Asian business, Lazada. They have a Turkey business, Trendle. They have freaking Cloud, right? They still have Ant Financial, which is a big business, man. It's one of the leading players in the fintech in China. Tencent and freaking Alipay are the main dominant leaders of fintech in China. They have Taobao Ideals that are still gaining market share in that sector. So they still have so much potential to grow. And I think people are just still discounting that. They're not really thinking about that opportunity when they're thinking of Baba. They're just waiting on the regulation and them not knowing what's going to happen, which is a real risk.
people have been volatility and risk phobic. And so wherever they see perceived risk, they flee from it because of the experience of the losses in the great financial crisis.
And that is so true, man. When anyone sees risk or uncertainty, they're just afraid, man. They just run to the hills. If there's any type of perceived risk, even if it's nothing that even if it's something in the short term, they're gonna leave. They're gonna run away. And that's why I see Alibaba as such an amazing investment. But even with that perceived risk, there is still risk because the government sometimes might be unpredictable. Even though the government has been doing stuff that any economy has been doing. Think about it, USA, Italy, whatever the places, UK, they've all fined Google for anti-monopoly stuff. They've all fined all of these damn tech companies for the same thing China is doing to Alibaba, right? So you can't take that regulation, anti-monopoly stuff as it's just China. It's every other country. So that's how I think people are taking it too far. Like, all this regulation happens everywhere. It's not just focused on China. People are just scared because people think that Xi Jinping is going to take over the company. I think that's the fear. It's not the fines, because every company gets fined. We just seen Google get fined. We seen Facebook get fined. But people just think Xi Jinping is going to take over the company and destroy it, which has never happened in history. But that doesn't mean it can't happen, but it's just never happened.
Not. So our default position is that people overestimate perceived risk, and the real risk tends to be much less. And especially when there's a lot of headline risk about these companies. We had a big position in Facebook some years ago when Mark Zuckerberg was dragged before Congress, and we went over to see clients over in Europe, and they asked us about it. And one of the things that we said, well, what are your other managers doing? And they said, well, they're all getting rid of it.
And that is a perfect example, man. Do you remember that whole time when Zuckerberg had to go in Congress and he had to plead his case and basically crying in front of all the congressmen? The articles were going crazy, man. And we even seen recently the articles going crazy about Facebook and how that girl came out, talked about kids and how it's affecting kids and stuff like that. And what happened? Everyone, boom, just running for the hills again. This is the same opportunity he's seeing for Baba. People see a little bit of risk and they just can't take it. They just run away, man. And that's what we want. We have to be, honestly, blessed by this opportunity. You can't see that as a bad thing. When institutional investors run for the hills, we got to look at it as a positive. That's giving us the opportunity to buy these cheap stocks. So we have to be thankful for all the institutional investors crashing the stock.
And that turned out to be, that week of it turned out to be the bottom, and then Facebook's price. So Alibaba was 300 a year ago, and
remember, Alibaba was 300 a year ago. Look at this, man. Like, look where it was, 300, bro. 360% decline. What has changed in Alibaba? It's not the fundamentals of the business. Nothing has changed in that. So why is it so low? Yes, regulation. So it's not to do with the business. It's all macroeconomic factors. So it's trading around the damn same price as it was in 2017. So are you telling me the Baba business hasn't grown since 2017? if it's selling at the same price. That's what the market is telling you. Alibaba's business hasn't grown since 2017, right? And that's what the market is telling you. So how can you not see this as a huge buying opportunity?
And now it's 120. So that come down reduces a lot of risk in that name and other names in that space. I think the concern for us would be that something would happen that happened with the education companies, where the party just turned them into
Shut them
nonprofits.
down.
And that's a huge thing. Do we think that Alibaba is going to turn into a non-profit company? That's the risk that he's trying to assess in his investment in Alibaba. And when you really ask that question, like, what would be the motive for that? If they're providing so much jobs for the people, if they're actually helping the economy grow and improving the economy, what company, what situation would Xi Jinping use that leverage to just shut down Alibaba? He did it for the education because unfair for the population, it was unfair for parents, and they were just increasing the prices and forcing these kids that you have to go into these private sectors to get this education because you have to competing for spots that are like nothing. So they were trying to make sure that education was basically free for all and make it more accessible for all people, which I think that's pretty fair. So what way can we see the government saying, boom, Alibaba, you are a private company now? I just don't see that, as it's providing so much growth for the economy of China. It's basically the number one company, Alibaba and Tencent. So that's my reason why I just can't see that happening. And the risk right now, once the price gets lower and lower, you're actually reducing the risk and you're actually making the business more favorable for upside opportunity, because we already know the business is worth 300. It's just that the headlines, the regulations, Xi Jinping, the trade war is causing all these issues. So once the headlines settle, we can see a big comeback, in my opinion, right? But other than that too, we gotta remember that Bill Miller doesn't have a huge like Alibaba allocation. Like, he has, I think it's like 5% of his portfolio. So even if he's wrong on this bet, it's not gonna kill him, and that's what we gotta realize. But me, if I'm wrong on this bet, it's gonna hurt, man. I'm not gonna lie, man. This is gonna hurt because remember, I have Alibaba, Tencent, and JD.com all in my portfolio. It's more than 50% of my portfolio, so it definitely will hurt, man. So tell me what you think about this video. Is Bill Miller right on Alibaba? Is he wrong about Alibaba? Tell me what you think, man. So can you please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!